morning. It's the new financial year. You're watching All You Need to Know on Bloomberg Quint Live, and I'm Alex Matthew. First, the headlines. It was a positive start to the new quarter for the Asian markets after global stocks posted their best first quarter of the calendar year since 2010. Now, some of the strength this morning could be attributed to the latest Manufacturing Purchasing Managers Index reading in China. Theresa May's proposed Brexit deal faced a third defeat in the House of Commons. The UK Parliament now has time till the 12th of April to decide on its fate with the European Union. The Indian government will raise 4.42 lakh crore rupees via market borrowings on Friday. The figure is over 50% higher compared to the same period last year. India's fiscal deficit widened to 134.2% of its budgeted estimate in February, even though the government remains confident of meeting the 3.4% target for the financial year. And apart from Amethi, Party President Rahul Gandhi will also contest the Lok Sabha polls from the Wayanad constituency in Kerala. All right, we'll get to some of those stories in just a bit. For now, let's turn to the US markets and see how they performed on Friday. Stocks climbed to finish the quarter on a strong note. The S&P 500 posted its best quarter since 2009, and ride-sharing app Lyft's stock surged following its debut. Treasury 10-year yields increased, and that's a positive sign. Remember, the yield on the 10-year benchmark crashed recently and caused the inversion of a section of the yield curve. That's usually a precursor to a recession. Now, Ranita Young of Bloomberg News has this report on what happened on Friday.
Here in the U.S., equities are higher, capping off a strong quarter amid hopes of a U.S.-China trade deal very soon. We saw the S&P 500 see its best quarter since 2009. This was a quarter after it saw its worst quarter since 2011. Healthcare and IT shares led the way. We did see Lyft shares surge in its very first day of trading as investors rushed in to get a piece of the very first big U.S. tech listing of the year. The market cap is now at $23 billion. And number one ride-hailing service Uber will have its IPO next. Wells Fargo CEO Tim Sloan abruptly quitting, leaving the bank in a hasty search for a successor. Morgan Stanley President Colm Kelleher to retire at the end of June, staying on as a senior advisor. No successor has been named just yet, but JP Morgan now has China's approval to take a majority ownership at a securities joint venture. That makes it the first U.S. lender to receive such a nod from regulators. Meanwhile, we did see U.S. 10-year Treasury yields increase after a plunge earlier in this week, which really did trigger concern of slowing global growth there happening amid concern or of a trade war that is easing, and hopes that a trade deal between U.S. and China again will be reached very soon. The U.S. dollar is ending the week a little bit higher versus its major competitors in the Bloomberg Dollar Index, ending the week higher as well. And the U.S. economy is looking on track for continued growth as new home sales consumer sentiment seems to lead the way in surges this week. And that's a look at your Friday Wall Street action. In New York, I'm Ranita Young for Bloomberg News.
All right, UK Prime Minister Theresa May faced another setback on Friday after the House of Commons rejected her Brexit deal for the third time. While the focus is now on the 12th of April, which is the extended deadline set by the European Union, the country may also face snap general elections. Catherine Griefeld of Bloomberg News has more details in this report.
Markets will be looking to see if lawmakers can find any common ground on some of these exit options after Parliament rejected all 8 on the table last week. In addition, I think it's going to be important to watch how things develop with the European Union. EU President Juncker said this weekend that the bloc's patience with the EU or with the UK isn't going to last forever. So I think investors will be keeping an eye whether those relations fray further as we get closer to this departure date. I don't think it's anyone's base case at this point, but with 12 days to go, it's definitely becoming more of a risk. And I think it's pretty appropriate to say it's probably the worst nightmare for pound traders. I mean, the government's own analysis showed that a no-deal Brexit would lead to a significant depreciation of the pound. And talking to people in the market over the past weeks and months, they broadly agree with that assessment.
All right, let's turn to the Asian markets now. I'm joined live by Rosalind Chin of Bloomberg News, who's joining us from Hong Kong. Morning, Rosalind. I can see green across the board, and this comes on the back of the strong close on in the US. How much of that has to do with the positive economic data that's coming out of China?
I would say a fair amount because, of course, investors have been very concerned about the outlook for the world's second largest economy, the slowdown, of course, which would impact exports and growth in other countries as well, such as Japan, Korea, and in fact all around the world. So we did get some manufacturing PMI data out of China over the weekend, showing that manufacturing PMI climbed the most in 7 years in the month of March. So that, of course, giving hope to many investors around the world. This was, of course, seized upon, and we saw that new orders and also new export orders rose to the highest level in 6 months. But we didn't have such good data coming out of Japan this morning, which issued its Tankan survey results. Now, we saw that large manufacturers' view on current and future business conditions was not quite so hopeful. Sentiment tumbling, in fact, by the most in 6 years, adding to signs that this weakening overseas demand, which largely comes from China, is hitting an already sputtering domestic economy. But of course, we could see that change in the months and weeks, in fact, to come, with China now showing a little bit more optimism on the outlook for its own economy. So let's take a look around the region at how the stock markets are taking this. So we've got the MSCI Asia Pacific Index making gains of more than 1%. The Nikkei up by 1.8, nearly 1.9% in fact. Topics up by 1.9. Hang Seng, which has opened not that long ago, up by 1.4. Shanghai Composite and the CSI 300 all trading higher as well. And of course, down in Australia, the S&P ASX 200 up by 0.8% at this point in time. So overall here, broadly speaking, lots in the green. Now, we did also see that the US trade talks have been ongoing in Beijing. This week, we see Liu He, the Vice Premier of China, going to Washington for more talks as those progress. So possibly a bit more optimism on that front as well. Looking ahead, of course, this week, we've got non-farm payrolls coming up on Friday, which is expected to show an increase of 175,000 in March, largely in line with the average for the last 3 months. And we could see an increase in hourly earnings. So last week's tumbling bond yields, the issues and the concerns regarding that all seem but forgotten this week, but they could come back to bite going into the future unless some of the fundamentals, the foundations, improve as well. Back to you.
Thanks so much for that, Rosalind. In fact, well, she took the words right out of my mouth. I was going to talk about the fact that there's a lot of economic data that's coming out this week that you should watch that might possibly suggest that the concerns about global growth that came up in the recent past were perhaps a little overblown. Already that data coming out of China, which we should talk a little bit more about. That's the first official gauge of China's manufacturing sector, and it rebounded in March, signaling a stabilization in the economy as policy stimulus takes hold. The release backs up the signs of the recovery seen in the earliest data on the economy, which showed business confidence and stock markets improving and policy support and progress in the China-US trade talks. Enda Karan of Bloomberg News reports.
If you look at both new export orders and indeed new orders, both of them are 6-month highs, and that's a clear signal that future activity at least is rebounding. And as you mentioned, the overall index itself had its biggest rebound in 7 years. So I think there's no doubt it points to stabilization when you consider the backstory about stock market is also doing better in China this year. Business sentiment is somewhat stabilizing. I think it does indicate that manufacturers are finally turning a corner and headed in the right direction, and the ongoing progress in the trade negotiations has certainly been a help. So I think stabilisation is the key. How much better it gets from here is another story, Sherian.
Are there any reasons, Enda, then, and I suspect you're about to tell us that we should be a bit cautious when it comes to being too positive about this reading?
Yes, well, I mean, new export orders, for example, are still in contractionary territory, so they still have a little bit to go. And of course, there's always the Lunar New Year effect. I mean, we know that it was depressed in February for obvious reasons. And as always, the backstory remains these trade negotiations. They are making progress. We know that from last week, but they still haven't signed off on a deal, and much depends on the durability of whatever they do agree and how sustainable it will be. So I would say for now, there are indications that the manufacturing sector is turning a corner. The stimulus and planned stimulus is clearly helping things, but there's a little bit to go yet, Heidi, before they're completely out of the woods.
All right, let's turn to the Indian market now and look at the trade setup for the day in India. I'm joined by Darshan Mehta. Darshan, the first day of the new financial year, the cues are all positive. Positive close on Friday, and the global markets are positive today.
Yeah, so all of that, the Nifty Bank is looking extremely strong because some of the frontline banks have started to move up significantly. The SGX Nifty is currently up almost 50 points, which gives an indication, yes, we will be up for a big gap of opening in trade today. So 50 points up as far as the SGX Nifty is concerned. Let's take a look at how, the sector picture is. The Nifty was up almost 50 points on Friday. There was major outperformance as far as the mid-cap index was concerned, so that moved up by almost 1%. The Nifty Bank was flat in trade, and the Nifty PSU Bank was in the negative territory. So it was the counters like the Reliance and some of the IT counters that managed to move up. What did well was the ADR. So Vedanta, Tata Motors, HDFC Bank, Dr. Reddy's, all of them ended with a positive bias. In fact, all the ADRs ended with a positive bias. So that's the traction that we're seeing. Flows after many days of buying, FIs sold in finally 86 crores in the cash market. DIs were net biased to the tune of 1700 crores in the cash market. Now, if you're looking at what contributed to the Nifty was up 50 points. Basically, the HDFC Twins, Infosys, M&M, all of them contributed positively. On the negative side, it was ITC, IndusInd Bank and Kotak Bank. And both of them, IndusInd Bank and Kotak Bank, off late have been rallying significantly. So a little bit of profit booking was seen on both of them. Now, as far as the F&O queues are concerned, it's the start of the new series. Obviously, open interest build-up was down 4%. There was short covering that was seen as far as the April series was concerned. We are about the 11,600 mark in trade, and probably with today's gap up move, we will be about the 11,700 mark in trade. The Nifty Bank again was flat in trade, but still close to the 30,500 mark in trade. Where are positions being built? We are clearly at the 11,600, 700 mark in trade. So you can see that put writers are writing in at levels at 11,500, 600 and 700. So there is pressure that has the market to go on the higher side. But there is a lot of call writing even from levels of 10,600 right up to levels of 12,000. But 10,500 to 12,000, that seems to be the broad range that the market is looking at. What happened on Friday, since the market managed to rally? Again, put writers became active from 10,500 to 10,700, and call writers, a minuscule amount of writing still happening from 10,600 to higher levels. Now, if you're looking at the wicks was up almost 3%, moving back close to the 17 mark in trade. So there is traction that's there. The Nifty PCR came down given the fact that there is a change in series. So the Nifty PCR was at 1.49. The Nifty stocks in the F&O ban is Adani Power, so it managed to come in the F&O ban. What are the other counters in the F&O ban? There is IDBI Bank as well as Reliance Power, which are also there in the F&O ban. Now, in terms of stocks which moved on open interest build-up, there was Vodafone Idea, which saw fresh buying, open interest build-up of 89%, but remember that went right. SRF was down almost moved down by almost 2% at one point of time. It was down 5%. But expect a sharp downtick as far as the official announcement of the Dahej plant has come in. Again, fresh buying was seen in counters like IDBI Bank, Adani Enterprises and Reliance Power and Trade. So these are the counters which saw open interest build up. In terms of stocks which saw open interest decline, short covering was seen in UB as well as Coal India. Britannia, which came into the Nifty, that saw a little bit of long unwinding that came in. Canara also saw long unwinding, and of late we've seen that the oil marketing companies are doing well. Indian Oil saw short covering in trade on Friday.
Thanks so much for that, Darshan. Well, here's news that the bond market participants will be watching very closely. The government released its borrowing plan for the financial year that started today. The big number, the government will borrow a total sum of 7.1 lakh crore in FY20. Of this, 4.42 lakh crore, or over 60% of the total sum, will be front-loaded in the first half. Now, the first half borrowing figure is over 50% higher than the 2.88 lakh crore that was borrowed in the first half last year. Now, the sum for the second half is obviously pegged at 2.68 lakh crore. On the other hand, India's fiscal deficit continued to widen despite the government's expressions of confidence that it will meet its 3.4% target for FY19. The gap between the government's revenue and expenditure stood at 134.2% or 8.51 lakh crore rupees in February. Here's what Economic Affairs Secretary Subhash Chandra Garg had to say about the government's new borrowing program.
Gross borrowing program, 7,10,000 crore, divided into two halves. The first half is 4,42,000, which is 62.25 or 62.3%. The remaining 2,68,000 crores in the second half, which is 37.75%. In fact, if you look at the 5-year statistics, the net borrowing has been more or less static. We can give you that number. There is gross because of the repayments. Right.
Can you explain to us why the number is?
What is to be explained?
Is on the higher side? Is it on the higher
gross?
Side? Yes.
The gross is higher because of the repayment program. We stick to 3.4% for the time being. Yeah. No. As of now, this is what the law, what the target is.
When will you finalize? First or 31st?
The accounts get finalized over a period of time.
Well, you can trust journalists to catch on or latch on to any word that sounds out of place. Let's have a look at what's making headlines across the globe. Sue Keenan of Bloomberg News brings you the first word headlines.
We start with sentiment among large manufacturers in Japan. It fell the most in 6 years in the first quarter, adding to signs that weakening overseas demand is hurting the already sputtering economy. Confidence dropped to 12 through March from 19 back in December, and that's according to the Bank of Japan's Tankan survey. Sentiment remains positive but has not risen since 2017, and that fuels concern about the impact of this year's scheduled sales tax increase. On to Turkey now. President Erdogan facing pressure in local elections. His ruling party alliance and the opposition are both claiming victory in Istanbul, while the opposition looks certain to win the capital. State media says that Erdogan's AKP alliance has taken just over 50% of the national vote, with the main opposition camp at 38%. China, meanwhile, says it will continue its policy of no tariffs on American autos and car parts in the hope of bringing the U.S.-China trade disputes to an end. China removed retaliatory tariffs on cars back on January 1st. The finance ministry said that it may name an end date for the suspension of duties later, but for now it's welcoming the resumption of talks. This latest round of discussions moves from Beijing to Washington this week. And to the latest on Brexit, Theresa May's Conservative Party is planning for a potential snap election with just 12 days, count them, to go until the UK potentially crashes out of the European Union. Now, the House of Commons will take control of Brexit later Monday, seeking a plan that can command a majority in Parliament. May's cabinet is, as well known, divided at this point. Some ministers are calling for a hard split with no deal. Others are threatening to resign if that occurs. Global news 24 hours a day, on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Sue Keenan. This is Bloomberg.
All right. Well, you've got the trade setup for the day. You've also had a look as to what Asia is doing this morning. Let's take a look at some stock-specific information now. Mishika Parak is joining us with the stocks in news. Mishika, good morning. What are the stocks on your list today?
Yes, Alex. So there's big news coming in from a number of stocks today. The first one being SRF. The Pollution Control Board has issued directions to close operations in its industrial plant in Gujarat due to alleged non-compliance with the provisions of the Water Act of 1974. The company says it's in the process of filing a detailed appropriate reply clarifying its position with regard to this issue. The Dahej plant contributes around 70% to the chemical business revenue. Then let's look at Tata Motors' response to the S&P downgrade. The company says it is disappointed that by S&P's decision to downgrade Jaguar Land Rover now. The company expects improved financial results in the current quarter compared to the first 9 months of the financial year, with significant positive cash flow in the fourth quarter. Also, Tata Motors sold its entire stake in aerospace business to TASL for 625 crore rupees. The company also acquired the non-aerospace business from TAL for rupees 10 lakhs. Dr. Reddy's laboratory says that its Visakhapatnam's facility has been re-inspected by the Regulatory Authority of Germany and is considered to be fully compliant. Cipla has received 8 GMP observations and 10 PAI observations. These observations are both product specific, and GMP observations are related to the manufacturing and quality processes. There are no data integrity observations. The US FDA conducted a product specific pre-approval and good manufacturing practices inspection at its Kurkum plant from March 11th to March 20th. The inspection covered 3 units at the plant. Then we have Indoco Remedies. The US FDA has changed the inspection classification status from official action initiated to voluntary action initiated for the Goa plant. The company says this move signifies that the site has come out of the warning letter issued to the site in March 2017, and several pending ANDAs from this facility will now be approved. Lastly, we have Welspun Corp. The company will sell its plate and coil mill division and 43 megawatt power division for 940 crores to Laptev Finance Private Limited. The plate and coil mill division is expected to fetch a consideration of 873.5 crore rupees, while the 43 megawatt power division is expected to be sold for 66.9 crore rupees. The PCMD contributed 16.9% to the consolidated revenue and 15.4% to the consolidated EBITDA of the company for FY18. The sale is expected to be completed by May 31st of 2019.
Thanks so much for that, Mishika. Well, let's turn to the election updates we have for you from over the weekend. Rahul Gandhi will contest from not one but 2 constituencies in the upcoming Lok Sabha polls. The Congress president filed nominations to contest from Wayanad in Kerala, and that's apart from his family bastion of Amethi. The Congress says that the move reflects the party's decision to regain prominence in Kerala. Wayanad has stayed with the Congress, just by the way, since the constituency came into existence post the delimitation of seats in 2009.
Congress workers and our partners, that is the present national contest, they feel Rahulji should contest 1 seat from South India. This request and demand was mainly raised by Karnataka, Kerala and Tamil Nadu. There was deliberations here also. After that, all of us requested Rahulji that, ignoring the unanimous request from southern states, is not correct. So Rahulji must accept their demand. Finally, he has given his consent, and that now I am very happy to inform you that Rahul Gandhi will contest from Wayanad parliamentary constituency from Kerala.
All right, now the world's 2nd largest coral reef island is under threat from plastic. An important nesting site for turtles, Aldabra in the Indian Ocean, may have 1,000 tons of plastic threatening wildlife. Take a look.
Aldabra is an amazing protected area, but you have limits on how much you can protect it, and whether it's climate change or it's plastic pollution, it's showing that, yeah, you can be a million miles away and you can still have an impact on this place.
You know, it's a common misconception that suggests that the waste that comes onto the beach is from the local area, but it actually washes ashore from within the sea or the ocean, and that's all the waste that we produce. So all of us can make a small difference. Anyway, let's talk about some of the stories that you'll find on the website bloombergquint.com. First up, the Indian government has again extended its deadline to impose retaliatory customs duties on 29 US products, including almonds, walnuts and pulses, till the 2nd of May. This isn't a recent development though, and comes as part of a series of extensions. JSW Energy has called off its plan to invest in the electric vehicle business, citing uncertainties in the industry. Given higher than anticipated uncertainties associated with the EV business, the board has, after careful evaluation, decided not to pursue this business and maintain capital cushion for growth opportunities in power and other related businesses. That was a quote by the company. It was in a stock exchange filing. That's all you need to know going into trade today. Do stay tuned. There's a lot more coming up over the course of the day. This is Bloomberg Quint.